You're listening to AI Prism from Seoul Economic Daily.
Three numbers before the open KOSPI, plus 5.42%. SK Hynix, plus 13.06%. Record margin loans. It's Friday, June 26. Here's what today's story could mean for the Korean market. Let's immediately dissect the flow data driving that 5.42% KOSPI advance today.
Right, because when you dig into the notes from the Seoul Economic Daily, the divergence in this AI-driven rally is just, well, it's staggering.
Yeah, I mean, institutions net bought roughly 3.3244 trillion won, which is about $2.4 billion. But at the exact same time, foreign investors dumped 878.3 billion won.
Wow. Yeah, so about $630 million just gone.
Exactly. And retail investors just sprinted for the exits, selling off 2.4155 trillion won, or $1.7 billion.
Right.
It's like driving a supercar on a one-way street, powerful but precarious at the traffic turns. With institutional buying as the sole driver and zero foreign confirmation, how sustainable is this run?
Well, that is the critical vulnerability for you to watch right now. To understand if it's sustainable, we really have to look at how this institutional conviction is directly anchored to the AI memory megacycle. High bandwidth memory, or HBM, isn't just another part. It's the absolute bottleneck for global AI development right now.
Right, which gives memory makers crazy pricing power.
Exactly. I mean, just look at Micron. They just posted $41.5 billion in revenue with a massive 80.4% operating margin.
That is just an incredibly high bar.
It is, yeah. And as a result, upward revisions put Q2 operating profit near 100 trillion won, which is $71.2 billion for Samsung.
Oh, wow.
Yeah, and for SK Hynix, it's 71 trillion won, or about $51 billion.
But wait, the valuation gap there is huge, right?
Yeah.
Because Samsung and SK Hynix's forward PE ratios are sitting at roughly 8.02 and 9.44 times respectively. But Micron is trading at 19 times.
Yeah, it's roughly half of Micron's multiple. Even with identical cash flow mechanics, there's a massive discount. And that glaring valuation gap is actively pulling capital away from other sectors.
Oh, like the space sector rotation we saw.
Precisely. I mean, SpaceX's 31.5% post-IPO drop just flushed $287.9 billion, once about $205 million right out of Korean space ETFs in the past week.
And rotating that capital straight back into semiconductors.
Yeah, exactly. The market is aggressively hunting for bargains within this established AI cash flow narrative and basically abandoning those sort of speculative future promises.
Okay, so bringing this back to the looming risk for anyone holding these positions. To recover our three numbers, KOSPI plus 5.42%, SK Hynix plus 13.06%, and margin loans at a record 38.6 trillion won, or $27.6 billion. Together, they create an asymmetric setup where institutional AI conviction meets maximum retail leverage. The binary event you need on your calendar is Samsung and SK Hynix's early July preliminary earnings, which carry sky-high operating profit expectations of 100 trillion won and 71 trillion won. Any shortfall against those elevated expectations into a record margin loan backdrop puts forced liquidations at the center of the next sell-off.
That is the exact setup you have to be careful of. And, you know, as a final provocative thought for you to mull over this weekend, everyone is so fixated on chip yields and server demand right now.
Right.
But what happens if the recent inflation control signals from the Fed cool down broader corporate infrastructure spending? If the borrowing costs to build these AI data centers stay higher for longer, the very road this supercar is driving on might just run out of pavement.
That's today's AI Prism, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.